but the price is going to go up. And it's going to go up a pretty substantial amount. So you want to time your term with the need. If the need is going to be longer, you might want to consider a longer term. If someone goes with a term 10, it's not going to cost $100, maybe it costs $70. But what happens after year 10 is the price goes up significantly, way more than it would have been had you picked the term 20. So you want to make sure that if you're picking a term 10, your need is absolutely within that 10-year frame. You don't want to be stuck on getting hit with a renewal that's probably, 5 to 7 times what you're currently paying. It's going to sting. In this video, I'm going to be talking about term life insurance. Now, although term life insurance is one of the more common basic types of life insurance, it is commonly misunderstood. So first and foremost, what is term life insurance? Well, it's just that. It's term. It's temporary. Now, because it's temporary, does that make it a bad thing? Absolutely not. It is supposed to be temporary because the need it's covering is also temporary. So why would someone get term life insurance, or what are some of the things you might have that would, essentially require you to get term life insurance? Well, if you have young kids, if you have a spouse, if you have a mortgage, if you have other debts, those are kind of the common reasons for getting term life insurance. And all of those reasons are temporary. And that sounds kind of funny, but if you think of it, your mortgage is X amount today, and over the next few years, 5 years, 10 years, 20 years, you're going to be paying that off eventually to zero. So it is a temporary debt. So you only need to cover it while it exists. Your kids may be young now, so they rely heavily, financially speaking, on their parents. But the older they get, technically speaking, they rely less on you financially. So that need is also somewhat temporary. So the insurance is temporary, the need is temporary, but it's a perfect fit, and you absolutely need it if you have one of those needs, one of those things. And I'm going to draw out how term life insurance works from a payment perspective, from a coverage perspective. If this y-axis represents the amount you're paying for this term life insurance, let's say you were insured for, you have $1 million of term life insurance and it's costing you $100 a month, okay? And this x-axis is the time frame you're covered for. So year 0, year 10, year 20, and let's go to year 30. So let's say you have a mortgage that's going to be paid off in 20 years. Your kids are relatively young. They're maybe like 2 and 5, let's say. So you pick what's called a term 20 for $1 million. So that means your $100 premium is going to stay the same for 20 years. It's never going to increase during that 20 years. You're always going to be covered for $1 million. That's never going to change as well. What's going to happen is at the 20th year, you can renew your insurance policy, but the price is going to go up. And it's going to go up a pretty substantial amount. So you want to time your term with the need. If the need is going to be longer, you might want to consider a longer term. If someone goes with a term 10, it's not going to cost $100, maybe it costs $70. But what happens after year 10 is the price goes up significantly, way more than it would have been had you picked the term 20. So you want to make sure that if you're picking a term 10, your need is absolutely within that 10-year frame. You don't want to be stuck on getting hit with a renewal that's probably, 5 to 7 times what you're currently paying. It's going to sting. So term insurance, you pick how long you want the term to be for. Now, you don't have to pick a static 10 or 20 or 30 years. There are insurance companies that allow you to pick pretty much anywhere in between. So you could pick a term 7, a term 16, a term 24. You could really line up very specifically with what your needs are. So just keep that in mind. And your premium doesn't change for that term, but it will change and increase on renewal. And you're always going to be covered for whatever insurance amount you apply for. Now, to go through, how much do you need? That's a bit of a subjective formula, but they do recommend things like 10 times your annual income, covering your mortgage. So you add up your mortgage, your other debts, you add up how much you want to contribute to your child's education funds and other needs. And that would pretty much give you, a good ballpark of how much insurance you need. These days, like many insurances, I would say anything less than $1 million isn't going to be enough. The world's expensive we live in, especially if you flash forward to what $1 million is going to be worth in 10 or 20 or 30 years. So I would say at the absolute bare minimum, everyone needs at least $1 million, but it's not uncommon to need several $1 million. So in a nutshell, that's pretty much how term insurance works. Thanks for watching.